So you take a tiny breather. I'm being informed that Mr. Kigoli is back, but I'll be getting back to you. Mr. Kigoli, this is a question that I wanted to put to you before we lost you momentarily. Here's a question. You would like to think that for a man that we're calling smart politically, that is one Dr. President William Ruto, that the first people he should have convinced were the members of parliament that are allied to the Kenya Kwanza government, so that they speak in one voice. Now, this particular pronouncements that we're getting here from majority of the Kenya Kwanza members of parliament, is it sentiment, or is it an indication then to the fact that indeed, even within the party, there might be a lot of members of parliament who are opposed to this finance bill, but they've not been given the power to pronounce themselves?
It doesn't look like there is a chance to have a contrary opinion on this bill.
Yes.
And Kenya Kwanza is hell-bent on passing by all means.
Yes.
And that is up to them, because the government is for Kenya Kwanza for the next 5 years, and they will do whatever they want with the Kenyan people. And I agree with the sentiment of Justina that we Kenyans, because when we're given a chance to elect leaders, we retract into our small thinking of tribal cocoons and ethnic considerations than
yes.
voting for somebody on the ability to deliver on the public mandate. So we Kenyan people are the architects of the economic and political crisis we find ourselves in. And we are crying right now and saying we did not anticipate this. How couldn't we have anticipated? Yet we knew from the word go that if you vote this way, this is the likely consequence. If you vote this way, this is the consequence. It boils down to we the people. And when Honorable Member Elachi tells Raila Odinga, let Kenyan people be, let them suffer and eat the pain that they create for themselves, I tend to agree. Let us also learn, let us hit the wall and realize that what is it that is good for this country? Do we need to continue the ethnic trajectory of voting in leaders, or we need to change the way we electing leaders? And going back to my point, the ripple effect of this bill
yes.
is unimaginable, because we will be having multinationals relocating from Nairobi or relocating from Kenya. And when you look at the competitiveness of the cost of power or the power tariffs, compare it with Ethiopia. Ethiopia invested in one Ethiopian Grand Renaissance Dam. Now in Kenya, we are building mushrooms of dams, small dams scattered across the country. And if we wanted to invest in power generation like the Ethiopian people did, we would do it and make Kenya a competitive power in production of power, and would make our companies, and also the foreign companies wish to come to Kenya because it is affordable to use power. But under the current circumstances, the Kenyan market is not enviable, it is not competitive, it is not attractive, particularly to foreign direct investment. Now, this finance bill comes to compound those facts. Now, the government needs to rethink, the government needs to relook at the way they want to implement these development projects. Yes, they are good projects. Yes, we have statistics by the Kenya Bureau of Statistics saying that by 2050, we're going to have even almost double the number of people living in urban centers, and we need to plan for that. Now, it doesn't mean all these plans must be implemented in this financial year. It doesn't mean that way. A good listening government would measure the decisions or the impact of their decisions against the prevailing circumstances. And when you overtax people, we will be having an impact on retail sales, purchasing power, which speaks powerfully to economic growth and development. Now, we still have sectors that are lacking. Look at our education sector. We have one of the most innovative and dynamic youthful population, but our dismal investment in technology, especially in our universities and training institutions, is worrying and appalling, because look, our universities are increasing fees, not because they are modernizing the teaching methods, but because they just want to remain afloat. They just want to remain operational. Our universities have failed to invest in the state-of-the-art technology that can deliver education to meet the threats of the 21st century. We are still using and relying on outdated and old models of delivering education. Look, even most of our universities can't even offer good quality virtual education because they lack the infrastructure to deliver. Now, when you have university fees doubling or even tripling, it means higher education is going to be a reserve of the rich, and the poor are going to remain uneducated, and that is going to impact on the competitiveness of business innovation and entrepreneurial skills, because how are these people supposed to be implementing cutting-edge technologies in bolstering businesses? So the government needs to look at that as a ripple effect. Now, if we invested in one mega dam, if I go back, you would have the power of, like, the cost of power go down. Or if we opened power production to the private sector, it would offer competition to Kenya Power so that we can have a choice. I might choose Kenya Power, or I choose a private supplier of power to my business or my home, you know, to power plants and factories. But that is not the case in this country. Look, Mumia's Sugar, as a company that was doing very well, it was making nice sugar and everybody was liking it. Right now, that company is as good as dead, all right? And governments have been coming with 1 billion check, a political check actually, not even actual money. It's just some sort of a check, but it doesn't translate into anything. When we get private investors to go into this milling plant, political interference, you'll hear people like Malala coming out the loudest of their voices wanting to say how much they know about the company, yet in summary, what I'm saying is this: the government should incentivize the private sector so that the private sector has the resources to support the government's initiative, so that it lessens this pressure of overtaxing Kenyans to raise money. Incentivize the private sector, open up the market, let it be attractive to foreign direct investment. Talk to people out there, let them come and set farm here in Kenya. Let us have friendly power tariffs. Let us have a friendly taxable, you know, policies that do not scare people away but attract. Now, if you concentrate your taxation on just one aspect, the chances of you missing out on the minimum are very high. But if you spread these taxes so that we don't, or the people don't feel it immediately as too much pain, government will impose VAT on other products, all right, while opening up the private sector to more investment. And when you look at the borrowing previously, especially by the past regime, you see that the borrowing in the public or domestic has been so that is that the private sector is stifled of the money to invest because it is taking it to government bonds, treasury bills. Now, people cannot borrow to invest in their SMEs. Women and youth groups cannot even get money to implement their ideas. If government can borrow less from the public sector, from the private sector, but the private sector will have some money to give to people to start businesses, what you'll be achieving, or what the government will be achieving, is enabling many people to come into that taxable bracket, and that's what we want. All right. So let us bring many people into taxable bracket than advancing policies and measures that will send people out of the job market, and that is just going to cause so much suffering and pain to an already struggling economy.